Just 2 years ago, Fort Myers was the place everyone wanted to be. Home prices soared 75% in a frenzy of out-of-state cash, quick sales, and dreams of easy wealth. But now, Fort Myers is crashing. Median prices have plunged 12.2% in just a year. Over half of all listings have slashed their asking price, and investors are panicking as homes bought for $575,000 during the pandemic boom now bleed six-figure losses. Even cash buyers and snowbirds are fleeing a market flooded with unsold homes, sky-high insurance bills, and fear that the next disaster is always just one storm away. How did paradise unravel so quickly? And could this be just the beginning for Florida's coast? Sunrise over the Gulf, palm trees swaying, and sand between your toes. For years, Fort Myers promised an affordable piece of paradise. The draw wasn't just the powdery beaches or endless sunshine, it was the math. No state income tax, property taxes far below the Northeast, and everyday costs that seemed almost quaint compared to Miami or New York. During the pandemic, that equation turned explosive. Remote workers from Boston, Chicago, and New Jersey packed up for good. Lured by the promise of year-round warmth and a backyard pool that didn't break the bank, retirees who once split the year between Buffalo and Boca Raton now made Fort Myers home base. The city's reputation as a snowbird sanctuary grew, but so did its appeal to younger buyers who saw a chance to escape cramped apartments and lockdowns. Suddenly, every Zoom call seemed to feature a palm tree in the background. For investors, the numbers looked unbeatable. Median home prices in 2020 hovered around $185,000, less than half the national average. Airbnb hosts snapped up condos, convinced that a steady stream of vacationers and seasonal renters would keep properties full and profits high. Institutional buyers joined the frenzy, betting on endless demand and double-digit returns. The city's growth was supercharged by new arrivals. By 2022, more than 50,000 people had moved to Lee County in just 2 years, pushing schools, restaurants, and roads to the limit. Construction cranes dotted the skyline as builders raced to meet demand. Listings vanished in days. Bidding wars erupted over modest ranch homes. For a brief moment, it felt like Fort Myers could do no wrong. The logic was simple: sunshine, savings, and security. Why pay $800,000 for a two-bedroom in Boston when the same money bought a waterfront home with a boat slip in Fort Myers? Every open house became a stampede. Cash offers poured in from out of state, and longtime residents watched their home values soar. The dream of easy living and easy money seemed within reach for anyone who got in before prices climbed higher. Homes didn't just sell quickly, they disappeared. In 2021, the average Fort Myers listing lasted less than 10 days, with some snapped up in under 48 hours. Open houses turned into scenes of controlled chaos. Buyers queued outside in the Florida heat, contracts already filled out, ready to waive inspections and throw down $5,000, $10,000, sometimes $20,000 over asking. Agents fielded a dozen offers by noon, their phones buzzing nonstop. Sellers barely had time to consider one bid before another. Even higher arrived. The market's speed was dizzying. Local Facebook groups overflowed with desperate posts. Looking for any three-bed under $400,000 will pay cash. Sight unseen offers became standard. Some buyers closed on homes they'd only seen in video walkthroughs, trusting a friend or agent to FaceTime them through the kitchen. Flippers and Airbnb investors arrived in droves, convinced every property was a ticket to easy profit. The numbers seemed to promise only upside, rents climbing, bookings steady, and the belief that prices would never stop rising. Speculation took on a life of its own. Stories circulated of neighbors doubling their money in 12 months. Retirees sold homes up north and paid cash, driving prices higher and pushing out local families. Institutional buyers backed by Wall Street capital swept up entire blocks, sometimes outbidding families by tens of thousands. For a moment, the only risk seemed to be moving too slowly. But beneath the surface, optimism began to show cracks. By late 2022, the mood shifted. Whispers of overpaying grew louder at backyard barbecues and in real estate offices. Bidding wars cooled. Some buyers, having waived inspections, discovered costly repairs and insurance nightmares. The same homes that once drew a dozen offers started to linger on the market. Sellers used to dictating terms watched as showings slowed and lowball offers crept in. The dream of effortless gains faded. The market stretched thin by months of breakneck speculation began to falter. For many, the rush to buy started to feel like a game of musical chairs, one where the music was slowing and nobody wanted to be left standing when it stopped. On September 26, 2022, the sky over Fort Myers turned black. Hurricane Ian, a Category 4 monster, drove a wall of water straight into the city's heart. Winds topped 150 miles per hour. Storm surge swallowed entire neighborhoods. In less than 24 hours, the landscape was changed beyond recognition. Streets that once bustled with tourists and new arrivals were buried under feet of sand and debris. Boats were tossed onto lawns, cars submerged. Roofs peeled off like paper. Power lines snapped, bridges buckled, and the grid went dark for days. The destruction was staggering. Damage across southwest Florida climbed past $78 billion, one of the costliest storms in U.S. history. Fort Myers Beach, a postcard stretch of pastel motel and seafood shacks, was nearly wiped off the map. Blocks of homes were flattened. Hotels gutted down to concrete shells. In the aftermath, families returned to find only foundations and waterlogged memories. Infrastructure crumbled under the weight of the disaster. Water and sewer lines ruptured. Cell service vanished. For weeks, piles of ruined furniture and drywall lined the curbs, waiting for trucks that couldn't keep up. Some neighborhoods stayed empty for months, their owners gone, their windows boarded, their lawns wild with weeds. The economic toll stretched far beyond the immediate wreckage. Small businesses shuttered, unable to recover from lost inventory and months of closure. Tourism, the lifeblood of the region, evaporated overnight. Hotels and vacation rentals stood vacant through what should have been peak season. The ripple effects hit every corner of the local economy. From restaurant workers to contractors to city budgets suddenly starved of tax revenue. For those who stayed, the sense of loss was more than material. The storm didn't just erase homes and landmarks. It shattered the promise of safety that had drawn so many to Fort Myers in the first place. In the wake of Ian, the risks of living by the water could no longer be ignored. What began as a paradise now carried a price that no one could have imagined. Insurance premiums in Fort Myers are rewriting the rules of homeownership. What once cost $4,000 or $6,000 a year now routinely tops $15,000, $20,000, sometimes even $28,000 for ground-level properties near the water. For many, the renewal notice is a shock, an instant jump that can double or triple last year's bill with no guarantee the policy will even be renewed at all. Major insurers have pulled out of Florida, leaving thousands scrambling for coverage. State-backed Citizens, once a fallback, is overwhelmed and still expensive. Agents now feel desperate calls from owners who've received non-renewal letters or quotes so high they simply can't pay. One insurance professional recalls a client with an $850,000 home facing a $29,000 annual premium. The owner nearly fainted. That kind of sticker shock is no longer rare. The problem isn't just the price, it's the unpredictability. Insurers have redlined entire zip codes, especially those hit hardest by Hurricane Ian. Older homes, ground floor or condos, and properties in flood zones are often declared uninsurable at any price. Even new construction isn't immune. Builders tout hurricane-resistant features, but buyers still face five-figure premiums and strict requirements like new roofs and wind mitigation reports. Flood insurance has become its own hurdle. FEMA's risk rating 2.00 now prices policies by actual risk, not broad zones, sending some premiums soaring overnight. Buyers are blindsided by 30-day waiting periods and last-minute policy denials, derailing closings and forcing sellers to start over. For many, insurance costs now swallow any savings from Florida's low taxes or affordable home prices. Investors who banked on steady rental income find profits wiped out by rising premiums. Retirees who moved south for peace of mind are suddenly budgeting more for insurance than for property taxes or even their mortgage. Even cash buyers, once immune to rate hikes, are walking away. In this environment, every home sale is a gamble. Ownership isn't just about affording the house. It's about surviving the next renewal letter. As one local agent puts it, the real risk in Fort Myers isn't the next hurricane. It's whether you can afford to stay after it passes. The numbers now tell a story of retreat. In July 2025, the median home price in Fort Myers has fallen to $325,000, a 12.2% drop from the year before. That's not just a dip. It wipes out years of gains for buyers who thought they were getting in on the next Florida gold rush. Across the Cape Coral, Fort Myers Metro, the slide is nearly as steep, with an 11% decline since the peak. Price cuts are everywhere. Over half of all listings, 52%, have been slashed before finding a buyer. That's more than double the national average. Sellers who once held out for bidding wars now chase the market down, slicing tens of thousands off their asking price just to get a nibble. Each new markdown resets the bar for the entire neighborhood, pulling comps lower and fueling a downward spiral. Homes that once vanished in days now linger. The average listing sits for 82 days, up 23% from last year. Some stretch past 3 months, gathering dust as buyers hesitate. Open houses are quiet. Agents field more questions about insurance quotes than granite countertops. Offers, when they come, arrive 5% below asking on average, and many sellers are forced to accept even steeper discounts to close the deal. For investors, the pain is immediate and personal. Take the case of a short-term rental owner who bought a 3-bedroom condo for $575,000 in 2022, expecting to flip it or fill it with Airbnb guests after months of vacancy and mounting insurance bills. They listed at $675,000, hoping to salvage a profit. No offers. The price dropped to $625,000, then $575,000, then $500,000. Still nothing. By spring, the listing sits at $485,000. If it sells, the loss will top $100,000, not counting renovations or holding costs. The investor's monthly losses now run $3,000 or more, with insurance premiums that have quadrupled since closing. The short-term rental dream has collapsed into a cash drain. This isn't an isolated story. Agents report dozens of similar cases. Speculators who bought at the top now forced to cut their losses or walk away. The promise of easy money has curdled into anxiety and regret. Even longtime owners feel the squeeze as every new sale at a lower price drags down appraised values for the entire block. Neighborhoods that once buzzed with renovation crews and open house banners now bristle with for sale signs and empty driveways. The numbers don't lie. With prices falling, cuts multiplying, and homes sitting unsold for months, the Fort Myers market has lost its swagger. Value isn't just eroding at the margins. It's evaporating for anyone who bought in the frenzy. The question now isn't how much you'll make, but how much you're willing to lose to get out. Cash, once the lifeblood of Fort Myers real estate, is drying up. Condo sales funded entirely with cash have slipped from nearly 2/3 to just 57.5%. Single-family homes, a favorite for out-of-state retirees and investors, have seen cash purchases collapse from 33.8% to only 25.7%. Even buyers immune to mortgage rate hikes are now backing away, spooked by insurance bills, hurricane risk, and the threat of further price drops. The exodus is sharpest in neighborhoods once dominated by Midwest and Northeast transplants. Zip codes like 33901 and 33908, where snowbirds and pandemic buyers had bid up values just a few years ago. The retreat of cash buyers leaves a vacuum. Sellers who once counted on quick, clean deals now face a gauntlet of inspections, appraisals, and nervous lenders. Each failed closing adds another week, another price cut, another layer of doubt. And as confidence evaporates, a darker reality is taking hold. Foreclosure filings are surging. In May 2025 alone, more than 100 homes in the Cape Coral, Fort Myers area entered some stage of foreclosure, a spike of over 50% from the previous month and more than 60% higher than a year ago. The courthouse docket is thick with stories of distress, adjustable rate mortgages that reset to unaffordable payments, job losses after Hurricane Ian gutted the hospitality sector, insurance renewals that doubled or tripled, pushing monthly costs beyond reach. For many, the math simply stopped working. One household's ordeal stands out. In 2022, a retired couple bought a modest three-bedroom for $425,000, escaping northern winters and betting on Florida's promise of easy living. Their insurance bill was $6,000 that first year, steep but manageable. After Ian, the renewal came, $20,000. Their savings drained, their fixed income stretched to the breaking point. The couple missed a payment. By spring 2025, the bank filed for foreclosure. The couple packed up, leaving behind not just a house, but the dream of a secure retirement. Their story is echoed up and down the block. Neighbors forced to list at a loss, others falling behind as costs spiral. The pressure isn't limited to recent arrivals or speculators. Longtime residents, some with decades in the same home, are watching their neighborhoods unravel. Foreclosure signs dot lawns that once boasted fresh paint and new landscaping. Each new filing adds to the sense of unease, fueling more listings and more price cuts. The market's foundation, confidence, has cracked. Behind every statistic is a family, a retiree, or an investor caught off guard by forces beyond their control. The promise of Fort Myers, once so certain, now feels fragile. As cash retreats and distressed sales mount, the city faces a new reality, a buyer's market defined not by optimism, but by anxiety and loss. The supply glut is only beginning to take shape. With thousands of homes waiting for buyers who may never come, the question on everyone's mind isn't just how low prices can go, but how many more families will be forced to walk away before stability returns. Inventory is flooding the Fort Myers market. In July 2025, condo listings have jumped 37.2% to 3,476 units, while single-family homes now number 7,057, a 24.3% surge in just 12 months. For buyers, the choices are overwhelming. For sellers, it's a nightmare that keeps getting worse. Every new listing adds to the pile, and each unsold home is a reminder that the days of easy deals are gone. The story isn't just about numbers. Builders are still delivering new homes, even as resale properties sit untouched. National firms from Leonard to Dr. Horton are locked in a race to lure the last remaining buyers. Their sales offices offer mortgage rate buy-owns, $20,000 in closing credits, free upgrades, and even luxury appliance packages. Sweeteners that traditional sellers simply can't match. One builder spokesperson puts it plainly, "We'll do what it takes to move inventory. If that means a $50,000 incentive, so be it." The competition is brutal. Buyers walk into model homes and see hurricane-resistant windows, brand new roofs, and builder warranties that promise peace of mind for years. Next door, older homes list for the same price or more without any of those perks. Sellers who bought during the boom are boxed in. They can't offer incentives, and many can't afford to drop their price enough to compete. Some try slashing their asking price, but every cut drags neighborhood values lower, resetting expectations for everyone else. The market has flipped. Where buyers once scrambled to win bidding wars, Now they hold all the cards. They negotiate hard, demand repairs, and walk away if a better deal pops up down the street. Sellers are left chasing a shrinking pool of buyers. Their leverage gone. The sense of urgency that fueled the pandemic boom has vanished, replaced by a slow, grinding standoff. Builders keep building, incentives keep growing, and the inventory mountain only gets steeper. The question isn't if prices will fall further, but how long sellers can hold out before the next round of cuts arrives. Pain in Fort Myers isn't distributed evenly. The market's unraveling is sharpest at the edges. Smallest homes and biggest gambles are taking the hardest hits. One-bedroom properties, once snapped up by Airbnb hosts and first-time buyers, have lost 18.1% of their value in just a year. Two bedrooms, the bread and butter of snowbird season, are down 12.1%. Three-bedroom homes, long the target for young families and retirees, have slipped 3.1%. Even the 4- and 5-bedroom market, favored by multi-generational households and luxury investors, is bleeding. 4-bedroom prices have dropped 6%, 5 bedrooms by 9.1%. Each segment tells its own story of retreat. The smallest units, often bought with dreams of easy rental income, now sit vacant or sell at deep discounts. Larger homes, once considered safe bets for appreciation, are no longer immune. Owners who paid top dollar during the boom are facing losses that would have been unthinkable just 2 years ago. Neighborhoods that once buzzed with renovation crews and moving trucks now echo with uncertainty as new listings pile up and buyers hesitate. Nowhere is the fear more acute than in Cape Coral. Data shows 8% of homeowners there are underwater, owing more on their mortgages than their homes are worth. That's the highest rate in the nation. For those caught in this bind, options are limited. Selling means locking in a loss. Staying means hoping the market turns before insurance or repairs force their hand. The psychological toll is visible in every block lined with for sale signs and every online forum where anxious owners trade rumors about the next round of price cuts. This uneven collapse is reshaping how buyers and sellers approach the market. Investors once hunted for bargains by bedroom count, calculating rental yield or resale value. Now every segment carries risk. Oversupply is dragging down values across the board, but the steepest declines are a warning. No property type is safe when confidence disappears and leverage evaporates. The decision for owners isn't just when to sell, but whether they can afford to wait at all. Rental income in Fort Myers has always depended on the seasons. Every winter, snowbirds arrive, filling condos and beach houses, driving up nightly rates. But when the weather warms up north, the city empties out. Summer brings long stretches of vacancy, and owners scramble to cover costs until the next migration cycle. In the past, steady tourism softened these swings, but Hurricane Ian changed the equation. Hotels and short-term rentals still struggle with repairs and visitor numbers have not fully recovered. Hospitality jobs, once a safety net for many, have vanished, leaving fewer local renters and thinning the pool of reliable tenants. For homeowners, the choices are grim. Those who bought at the peak are staring down losses they never imagined. Selling means locking in a hit, sometimes wiping out years of savings. But staying is not easy either. Many locked in low mortgage rates during the boom, making monthly payments manageable for now. But insurance premiums and taxes keep climbing. Owners who lose a job or face a major repair often have no way out. Forced sales, divorces, or relocations push more properties onto an already flooded market, driving prices lower for everyone. The catch-22 is clear. Hold on and risk deeper losses as values fall. Sell and accept a painful reality. The dream of easy profit or a carefree retirement has evaporated. In Fort Myers, the volatility is not just in the market. It is in the lives of the people who call this place home. The so-called buy-the-dip opportunity in Fort Myers is proving far more treacherous than bargain hunters expected. Investors who snapped up homes at a 12% discount are discovering that the math no longer works even at lower prices. Insurance premiums, now routinely 5 figures, devour any hope of rental profit. Maintenance costs and hurricane repairs add another layer of uncertainty. What looks like a deal on paper quickly unravels once the true cost of ownership comes due. Regional economists warned that the forces at play here are not short-term. A 75% price spike followed by a Category 4 hurricane, a mass insurance exodus, and record oversupply. These are structural shocks, not just a market cycle. The last time Florida saw a crash of this magnitude, it took 6 to 10 years for prices to fully recover. Today, the picture is even more complicated. Climate risk is now embedded in every appraisal, every insurance quote, every buyer's decision. No peer-reviewed forecast will pin down a 5 or 10-year timeline, but the consensus is clear. Stabilization will take years, not months. One local economist puts it bluntly. What's different this time is the permanence of the risk. Insurance isn't coming back down. Hurricanes are getting stronger. The recovery, if it comes, will be slow and uneven. For those eyeing Fort Myers as a quick flip or a safe haven for cash, the warning is stark. The bottom may not be in. Even optimists admit that the days of easy money are gone. The reality is that Fort Myers could be a cautionary tale for coastal Florida unless insurance reform, climate adaptation, and a rebuilt local economy can rewrite the story. Will the city bounce back? Or is this the new normal for paradise on the edge? In July 2025, the median home price in Fort Myers stood at $325,000, down 12.2% from the year before, a reversal that few predicted during the pandemic boom, when prices soared by 75% in just 2 years. The data is clear. Over half of all listings now face price cuts. Inventory has surged to record highs, and more than 100 foreclosure actions were filed in May alone. Hurricane Ian's $78 billion impact in skyrocketing insurance costs have left lasting marks, with Lee County prices still 7.5% below pre-storm levels. Yet despite these numbers, no one can say for certain how long recovery will take or if the area's reputation can fully rebound. What is clear from court records to sales data is that Fort Myers' crash is not just about housing, but about risk, financial, environmental, and economic. Whether this remains unique to Lee County or signals broader danger for Florida's coasts, the documents leave no doubt. A once booming market can unwind much faster than it rose.